Dan sektor utiliti dijangka mampu merekodkan pertumbuhan memberangsangkan tahun ini disokong peningkatan dalam permintaan tenaga serta pengukuhan nilai ringgit. Ia membantu syarikat utiliti seperti Tenaga Nasional untuk mengimbangi kenaikan harga arang batu. Namun beberapa faktor perlu diberi perhatian seperti kemungkinan pengurangan subsidi gas yang mungkin memberi kesan kepada kos tenaga. Untuk analisis lanjut bersama Dr. Nazri, Ketua Penganalisis Runcit Affin Investment Bank.
As for next week, we would like to recommend to our customers defensive quality sectors, which is utilities. This is because we believe utility sector has a relatively high dividend yield. Given the uncertainties that we see in the economic outlook today, we believe taking some position in utility sector will be very prudent at this point of time. There are two stocks that we would like to recommend this week going forward, which is YTL Power and Tenaga Nasional. Firstly, we believe utility sector has very predictable cash flow. They have very good dividend payment as well as good management. We can see already the electricity demand, for example, has been consistently good. The sector earning is expected to be roughly 10% for 2011, which is good enough, we believe, for defensive play. There are high potential for higher electricity demand because of the acceleration of mega project rollout under Economic Transformation Plan. We also see some potential for tie-ups between local player and overseas power player. We can see that several companies in utility sector have shown tremendous operational effectiveness despite the rise in coal price, for example. And utility sector, we must stress here, has been underperforming the broad market. Given that we believe they are relatively cheap, we can see that the PE ratio, the average is about 12. From 10 to 15, we average about 12 to 13. To us, that is relatively cheap. The yield is high. Most of the balance sheet are strong, and there's also potential for capacity expansion that is going to be undertaken by some of the key players. The catalysts for this sector are very simple. We believe there will be more new contracts between local and foreign players. There will be more positive contribution from overseas earnings. YTL Power, for example, has shown strong results. Last quarter 4 result has been very strong. There is a strong earnings contribution, especially from their Singapore power plant, which is Power Seraya. They have just commenced a new power plant, about 800 megawatts. And we can see that the PE ratio is 13, which is relatively very good, given that the return on equity is about 17% and the dividend yield of 6%. Our target for YTL Power is 3 ringgit. We believe there is more potential. We can see already that revenue has grown. Revenue has grown about 5%, and the core earning also has consistently grown by about 5 to 10% over the 10 years. They have very good governance, and they also have very good parentage quality. Now, the second stock that we would like to recommend is Tenaga Nasional, simply because they have monopolistic position in the electricity distribution. We all know with the rollout of mega project in ETP, Tenaga Nasional is expected to get a boost in hot demand, especially from the southern states and from the East Malaysia. We also would like to remind investors outside there that Tenaga has a huge cash pile, about 9 billion ringgit. So we are expecting Tenaga to pay a slightly higher dividend. We estimate the dividend yield to be a massive 12% for this year. The EBITDA margin, although has dropped, remained very healthy at about 28%. They have strong contribution from the associates. The profit, the earning has gone up by about 9%. We also see that they have a strong support from the institution, especially from the key institution. So we believe the concentration of institution is likely to support the downside. They can cushion any downside. And we must stress here that Tenaga has been traded at a very cheap PE ratio right now. Our target price is 8 ringgit. That gives about 10 to 20% gain over in the near terms.